How better go there, how better go there, how better go where, how better go here, how better now, how better go.
Are IRS liens similar to property tax liens? Welcome back. I'm Ted Thomas. I've been involved in a subset of the traditional real estate business, which are tax liens and tax defaulted property, for the past 30 years. This subset of traditional real estate includes single-family homes, residential buildable lots, small apartments, and small farms and office buildings. The major difference is these properties have all gone through tax default. That means the property owners have not paid their property tax. So, what about these taxes? Well, when added together, taxes become pretty cumbersome and confusing and difficult to pay. Today's episode is a discussion and a common question about the IRS and the property tax. So the IRS is trying to collect income taxes, whereas property taxes are really just that. They're property tax. There's a world of difference. Income tax is taxed at sky-high rates. Property tax are pretty low rates, 1 or 2%. So it seems that everyone knows about the dreaded IRS acronym. Well, just in case you don't know, it stands for the Internal Revenue Service. Now, the federal government has this great thing that they do. They name the agencies very positive names like the Internal Revenue Service. Well, it sure doesn't match the function, because the Internal Revenue Service wants to collect a major part of what you earn, maybe 25, 35, even higher percent of what you earn. So we're going to talk about the Internal Revenue Service. That has to do with ordinary income, whereas we're talking about property tax. That only has to do with the property where the taxes are very low. All right, so we're just going to teach you how to honorably take advantage of a system the local government has put into place to get property that have been tax defaulted back into the marketplace. So the IRS, what are they after? They're after collecting taxes on income. What are we talking about in this program? Well, we're talking about property taxes, which the local county is trying to get those properties back into the marketplace. Why do they want to do that? Because they're tax defaulted and they've confiscated. Now they want to sell them for absolutely bargain prices. So that's what this episode is all about. Now, they're both similar agencies in that they can collect taxes. They're also similar in that they can put a lien on your property. So the question comes up all the time. Can the IRS put a lien on my property, meaning my home or my residence or my farm or my apartment? And the answer is yes, but there'll already be a property tax there. The property tax is always the priority lien, so it's always the very first lien. All right, now why is that the first lien? Because the property tax pays for the school teachers, the schools, for the local police department, for the sheriff's department, the firefighters. You're getting the idea? What about fixing the roads? What about the libraries? What about the hospital? Well, the local county has those bills, so that property tax owners have to pay those local bills. So property taxes are generally a small part of the total value of the property. Total value is $100,000. It might be 2 or 3% of that. I don't think I've ever seen higher than 5%. So it's a very low tax to pay, but it adds up to quite a bit of money simply because the properties have such high value. So the IRS is the federal government, nothing to do with the county, but they could file a lien on the property. They file a lien on the person first, and then they also file it on the property. So they put 2 liens, one on the person themselves, and then the other on the property. Now, of course, the people can move, so what would happen? Well, they're not going to take the property with them, so the property can't be sold or mortgaged. Nothing can change on that property until the IRS does finally get paid. So property taxes on real estate are common. IRS liens are not so common, but both of those liens could be filed against the property. So can an IRS lien be on your house? The answer is yes. However, the priority lien on the property is always going to be the first one to be paid, and that is going to be the property tax, so that the county government gets paid before the Internal Revenue Service gets paid. So the answer is both of those liens could be filed against your property. Anybody, this could happen to anybody. All right, so they both are a burden on the property. First comes the tax lien. However, the local government could actually auction off the property.
All right, ladies and gentlemen, let's get her going here. Start me off. Where to bid to go? Have it $1,000, open it up.
They could auction the property so that they could collect their tax lien. That would still leave the other Internal Revenue Service lien on the property. So when you buy that, the property could still have an IRS lien on the property. All right, so the county is attempting to collect property tax when we talk about tax defaulted property or tax lien certificate. The county is trying to get there. So to determine the priority of the lien is very, very simple. First in time is first in place. I won't spend a lot of time on it now, but I do want you to know there's over 3,000 counties across the United States. All 3,000 plus counties are trying to collect property tax. If they can't collect it, they're going to auction the property.
How better go there? How better go there? How better go where? How better go here? Better go here? How better now? Better go.
So that they can collect the property tax. So for clarity, understand that the starting bid at those tax auctions, those property tax auction, is going to be the back taxes at least. So it could be the minimum bid. Now the minimum bid then might only be 10 or 20 cents on the dollar compared to the value. Now folks, if you can buy a property for 10 cents on the dollar and resell it for 50 or 60 cents on the dollar with no mortgage and no deed of trust, how many properties would you like to buy? You'd like to buy as many as possible. Buy them for 10 cents, sell them for 50 or 60 cents. You get to keep that whole margin in between. Meanwhile, the county gets paid. Are they happy? Yes, they're going to be very happy. And you're going to be happy too when you sell that property and make a large profit. All right, so how would you sell those properties? Well, you could use eBay. You could use Craigslist. You could use a multiple listing service. You could use Zillow, Trulia. You could sit at home and do this on your computer and use Facebook Marketplace. You're getting the idea. All those electronic sites are available to you. So you could buy a tax defaulted property online, and now you can sell a property online. What would be better than that if you could do it for 10 or 20 cents on the dollar and there's no mortgage or deed of trust alone? All right, so the idea is this is going on and it will keep going on. It's been going on for well over 200 years where the county is selling tax defaulted property. That means there's a property tax lien on the property. Now, when they sell the property, the IRS lien could still be on it. In other words, a priority before the IRS lien. All right, now, folks, if you're an entrepreneur, you're putting in some long hours, you want to control your outcome, well, this is a way that you can control not only your income, but your outcome in the future. Now, throughout these videos, I try to include some interesting examples of things that can happen. So let's take a look at some of those and see if this would really work for you. So in a local county with a small population, it was very near Tampa, Florida, one of my student investors purchased a property, a single-family home, 3+1, all right, for $9,100 at auction. That meant there was no deed of trust and no mortgage. Now, the property was slightly used and abused, and it was completely overgrown with trees, and most investors didn't look at it because it did not look good from the street or the sidewalk. Now, the tax assessor had valued the property at $91,000. Now, I said I bought it for $9,100, and now it's assessed at $91,000. All right, now using the techniques that the student learned in our training, he went out and checked comparables in the area and found out the property had a value of over $150,000 according to some of the comparables. All right, so he bought it for $9,100. So what did he do with it? Well, he found a tenant handyman that was willing to repair and start fixing the property, and that tenant handyman tendered a $5,000 down payment, and he sold the property for $150,000. Now, will every deal be that good? Well, of course not. But you don't have to make too many like that, and you're in a business that really is going to take care of you. So ask yourself, how many deals like that would you like to make in 1 year? Well, you probably like to make more than one. Now, this is just a teeny tiny glimpse of the spectacular kind of income returns you can get in a tax defaulted business. Now, there are many more that I'll tell you about in future episodes. It's time for me to kind of button it up. But understand that properties are sold at tax defaulted auctions.
All right, ladies and gentlemen, let's get her going here. Start me off. Where did it go? Have it $1,000, open it up.
Because they had a property tax lien. They might still have an IRS lien on it, but the deed of trust and the mortgage loans will be wiped out from the property. Okay, now what I'm talking about is not theory or forecasting. It's a process. It's what's been working best in the marketplace to attract high income, with very low investments, okay? So this system not only works, but it's been tested and perfected in the trenches when there was big money involved, like I just showed you a few minutes ago. Now I'm running out of time. I'm going to tell you right now, don't quit your job. This could be a side hustle. You can make enough money on one tax defaulted property to not only make your car payments, your house payments, and do all the vacations you ever want in your life. You see those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. A county with a small population, they're going to have dozens of these properties to sell, sometimes maybe up to 100. Now, counties with large populations, they're going to have hundreds, even thousands of properties to auction at tax defaulted auction sales. All right, right below me, if you'd like to, you can get a free auction list. I'm Ted Thomas. I'll see you on the next video. Don't forget, request your free auction list right below me.